Okay, here's a trade that we have placed an order at 13.11.50 to sell for, and we're going to just let this run and see if we get filled on it. Okay, we've just been filled here at 13.11.50, and you can see that our stop is at 13.12. Well, it's already dropped. Okay, we've hit our first objective very quickly there. So our stop has already been reduced from 6 ticks down to 3. Notice that the stop is still in place. I'm sorry, that our buy limit for 2 contracts is still in place at 13.10.75 for a 3-tick gain, even though we haven't been filled. Our stop has been adjusted. So in the NinjaTrader platform, this is what takes place in that when you've set it up as far as your parameters are concerned, that your stop will be adjusted when your first target is hit. Even if you don't get filled, that stop will be adjusted. So, and that's why we're still hopefully going to get filled here at our first objective, and our stop has been adjusted. So, at this stage of the game, if it were to rally up in at 13.12.25, we would lose 3 ticks on the full position. So at least we've reduced the stop down from 6 ticks to 3. Hopefully we're not going to get stopped. Hopefully this will turn lower as we expect it will, and give us an opportunity to have a good trade out of this. It's already hit 13.12, so it has moved against us a couple of ticks, and if it moves against us another one, we're going to get stopped out with a 3-tick loss on the full position. So hopefully we can get some more selling in here, which is what we anticipated. Obviously that's why we're short on this trade. So we're just going to give it some time here, and hopefully it will unfold and allow us to take some profits on this trade. So you can see hopefully it's coming back down here, and we'll get filled on that first objective. The way we like to manage our trades is our basic trade management protocol is our initial stop will be 6 ticks with a first objective to exit 1/2 of our position at just 3 ticks, 3/4 of a point. Once that happens, our stop is reduced from 6 ticks down to 3. When we hit our second objective, which is 6 ticks, our stop is then brought to break even. So in essence, we have an overall trade break-even stop in once the market has reached our first objective and we've been filled. Here it's come back down, and hopefully we're going to get filled here shortly. If it does, then we will have the profits on 1/2 of our position, in this case 2 contracts, because we sold 4 contracts. So if we can get filled here at our first objective, and then the market turn around and rally against us, the overall trade would be a break even, because we will have made 3 ticks on 2 contracts and lost 3 ticks on 2 contracts. So that's the idea behind adjusting that stop quickly. Once the market moves 3 ticks in our favor, we reduce our stop from 6 ticks down to 3. So it's a fairly conservative way to trade, and this is our basic trade management protocol. The main reason behind it is that it really protects the capital in the account should the market move against you, whether initially, in other words right away, and it doesn't hit the first objective, but even if it does hit the first objective. So here we are, we just got filled on our first objective, so we made 3 ticks on that. Now if the market were to rally up and hit 13.12.25, we would lose 3 ticks and have a break even on the entire position. However, if the market does dip down here another tick, there it has. Okay, now it moved in our favor 1.5 and the stop is now at break even for the final contract that we still have in play. So we have made profit on 3 out of the 4 contracts. We've taken 3 ticks on 2 contracts and 6 ticks on 1. So that's obviously a total of 12 ticks with our break-even stop now in place from our original entry price of 13.11.50. So we'll see if we can get some additional down movement here, but 12 ticks, that's 3 points, so 3 points of course works out to $150 basis the E-mini S&P contract at $50 a point, or $12.50 per tick. What I have done here is I've canceled the buy limit at plus 4 points, which is 16 ticks, that was programmed in with the buy stop at the entry price. So what I'm going to do now is I've erased that, because I'm going to go ahead and manage this final partial contract manually, and so I put a break-even stop at our entry price, and you can see that this selling line bar right here is a high, 1310.50, 1310.75. I mean, so I have gone ahead and placed the protective buy stop 2 ticks above the high of that selling green bar that just came in, that lime green bar. So what we will do is use the software to help us manage the trade in particular, and specifically the final 1/4 of our position. And so when we're short and a selling paint bar is formed, we will then place our protective buy stop 2 ticks above its high. And so that's what we've done right here. And okay, so now we've got obviously another selling paint bar. Selling in our terms is just a bar that has a lower low than its previous bar. We are not using it in that sense as far as our where the bar actually closed, which is a fine way to do it, but from our trade management perspective, we will not. So just going to lower that down to 1310.75. The high of that most recent selling paint bar you can see right there is at 1310.25. So should the market rally now and stops at 1310.75, we will have at least locked in 2 ticks of profit on this final 1/4 position. So hopefully we can get some more selling in here. The market had a good move overnight going into today. We knew that if the market could move below the 17 area, that was really quite bearish. It had come down and tested that area on Friday and then again on Monday. Today is Tuesday, the 12th of April. And so the market was certainly having a lot of weight on it, and we were expecting the market to have some continuation lower after the week close that it had yesterday. So we'll see what we can, hopefully we can get some more selling in here and actually send the market down a little bit lower and be able to make some additional adjustments on our buy stop here on the final 1/4 of our position. So we have traders that will just trade one contract when they get started, and they'll just go for the first objective and manage it that way. We have traders that trade a lot more than 4 contracts. So whatever your comfort level is to start with, we always encourage our traders to trade on the sim once they understand our overall trading approach, once they understand how to work our intelligent assistant, and once they've also had some experience. Well, actually the sim mode, a simulated mode, is to get some experience in sort of the logistics of actually placing the trade and adjusting the stops and so forth. Okay, so we had just formed here this blue cyan bar. The high is 1308.75, as you can see. So I'm going to lower the stop down to 1309.25. So I'm going to lock in 2 1/4 points here if the market should have a bit of a bounce, because you can see we're short from 1311.50. If it rallies up and hits 9.25, we got 2 1/4. So okay, we got 2 1/4 points on that, and 3 points on the other. So 5 1/4 point total profit on this trade. A nice trade, especially off of the short side, knowing that obviously the market is has a lot of weight on it here in the daytime frame. We knew that after the close yesterday, and fortunately we were able to participate in that down market and make some profit. So that'll be it from E-mini Day Trader. Thanks for watching.